Subscribe to my own, boy. Oh yeah, this is what life's all about, boys. So, welcome. Welcome to my first ever live. Let's talk to make a timestamp, get my morals up. Let's say hello. Mark my first ever live. Journey has begun. Come build your empire with me. Alrighty. Okay, and welcome again. Welcome, too many welcomes, my first ever live. So, my goal here for you today is to make investing and gambling two different things. So, let's look at the bad elephant in the room. Gambling. Oh no, gambling. What is gambling? Gambling is something that Gambling is something that unclear risk to reward. Unclear or bad risk to reward. Meaning what? Let's say for an example is that you win one W, but let's say 5 loss chance, meaning the probability of winning is diminished by the probability of losing. So like a pachinko machine, maybe blackjack, anything. Like you have 11% chance of winning. That's bad. Anything, I would say anything that's less than 50% is gambling. So I would say we really don't want to gambling. So this is gambling. So pretty much, and also unrepeatable, meaning have no real stats. Yeah, that's pretty much it. And also the last one is emotional base. base. Okay, so this is it. Let's break it down. What's gambling? Gambling is something that you put your money in and you have unclear or a very bad risk to reward ratio. Meaning that, let's say an example, if it's less than 50-50, then it's a very bad investment. You're not investing, you're gambling. Okay? And unpredictable, unrepeatable, sorry. So the second one is unrepeatable, meaning that you can't do it every time and expected the same risk to reward ratio. That means it's gambling. And emotional base, meaning that you trade using your mood. Let's say you think it's gonna go up or it's gonna go down based on none of any stats and none of any proven things to be an advantage for you, proven principles to be an advantage for you. Okay, so these are bad. So let's summarize it again in a very perfect sense. So gambling is when you invest your money and it's unclear or it is bad to risk to reward ratio. Anything that's less than 50% is bad. And the second one is unrepeatable. You can't repeat this. There's no stats or any proven method or history to back it up. And the third one is that you trade or you invest using your mood, which is bad. It's quite bad actually, because your mood can change based on anything, any other outside factors, but the good factor. But I mean, sometimes people win big in the emotional base, but I bet you they can't repeat the same success that they have done before. So gambling is quite dangerous, and it's a very high risk, high reward ratio. I've been there myself, and I'm here to make you guys know that this path is not the way. You always remember these three things. Okay, 3 things. If it's unclear to how much you put in and how much you're gonna get back, then it's gambling. If it's you can't do the same thing and expect the same amount of profit, then it's gambling. And then emotional based, if you are using your emotion, your mood, then it's also a gambling thing. So I don't want you guys to gamble. But what is smart investing? Oh, sorry. What is smart investing? Oh, Excuse me. Maybe there's a signal to go in. This is the same high. Okay. Excuse me. This is the previous resistance. If there's a somewhere along here actually. If there's a buy signal or sell signal here, I would go in. So let's go back. Smart investing. What is it? Pretty much high. Better risk to reward ratio. Anything above 1 to 1, meaning that if you trade in, if you invest, you trade, if you lose 1 but you gain more than 1, let's say you put in $1 but you have a 50% chance of getting $2 back. That's a very good investment because you put your money where it comes back with a better return. So that's basic. And the second one is that the risk reward is another thing. So better win rate. Anything above 40%. So the core value of it is that you can win. You don't have to win more than 50%. You may be wondering why. Like I just said, like anything that's less than 50% is gambling. Maybe it's a little bit confusing for you, but please stay with me. So the better win rate, anything above 40%, has to pair it with a better risk to reward ratio. That's better than 1 to 1. Because better win rate, anything above 40% is, let me translate this for you, okay? So let's say ideally 1 to 2 is perfect. Better win rate. So I will summarize this for you and then repeatable. So you can do it again and again. Expected profit in the long run. It has been proven, history proven, statistically proven, which is the method I'm using now. I have many masters and many teachers, and I've been looking at them for 2 years, and their strategy, which I'm using now in the journey with you guys, is proven to be true, proven to be profitable. And then the last one is non-emotional base, meaning using the same strategy every time. And the last one is the most important one, adaptable. Maybe you're wondering why. So what's the difference between something repeatable and adaptable? So adaptable, by this I mean you have to look at the market, and the market changes. So your strategy has to change with the market as well. But the core value remains is that you're risking your capital and you have to get something back in return far outweighs what you put in. Otherwise, that's going to be something that's just thrown in the water, and you don't want that. Okay, so let me summarize this for you. So what is smart investing? So first thing you have to have in mind is that you have to have a better risk to reward ratio, meaning you put in $1, you put in $100, you have to get at least $101 in return. Even though that's bad, that is still a bad risk to reward ratio. I would say if you get in $100, then how would you feel about if you risk $100 and you get $200 in return? That's good, right? But at the same time, that $100 could be gone. But that's why you have to pair it with a better win rate, meaning that if you have a strategy in trading or investing, you can repeat this every time, and with a 40% win rate, you would still be profitable, meaning that if you trade 10 times or you invest in 10 times, only 4 times out of 6 times you win, you would still be in profit. So let's say you invest $100 and you win and you lose 6L and 4 win, meaning that with 1 to 2 risk to reward ratio, let's do a simple math. So with the 6 losses, you would be in a negative. New chat. Maybe a negative $600. Six losses equals okay, but only 4 wins. That equals to $800. See what I mean? So net profit. Oops, my bad. Net profit equals $800 minus $600 equals $200. You get the picture, okay? You get the picture. Right? You get the picture. Hopefully hopefully you get the picture. Okay. So let me sum it up again. So for the investing, for the newbies in investing, So what is gambling? You don't want to do that. No. Gambling is bad. Gambling will lose you money. Gambling will lose your families and friends. Gambling will make you miserable, make you have regrets, make you not rich, opposite of rich, poor, and makes you feel like alcoholic sometimes. Trust me, I've been there, and that's bad. That's bad. Oh my god, I spelled gambling wrong. So gambling, unclear or bad risk to reward ratio. Okay, let's say it again. Gambling, I'm gonna clip this, okay? Gambling is something that you don't want to do it. How it's gonna affect your life is tremendously, hilariously bad. You don't want that. You really don't want that, because gambling will make your mood very bad for the rest of even a year if you made a bad investment. You can be thinking like, what could have been? It could have been something that's I could have been sitting on the beach and retired right now, but instead I have to still work 9 to 5. Something like that. That's bad for gambling, okay? So before you jump in anything, just tick the box if it is unclear or bad risk to reward ratio, meaning if you put in $5 and you get $4 back, that's you lost something. You don't want that. So you never go in something like that. Meaning risk to reward ratio. Okay, I have to get this again. Unclear or bad risk to reward ratio. Put in $100. Get back negative. Get back $50. Okay, so it's pretty much a dummy thing. So, okay, let's start again. Gambling is something that if you put in $100, you're more likely to get back. Likely. Okay, let's get back at it again. Repeat it again. So what's gambling? It is unclear or bad risk to reward ratio, meaning that if you put in $100 and it is very likely to get $50, losing $50, so you get a $50 back. So pretty much if you invest something and you're likely to lose money, or the return of it is bad, then it's negative. You don't do it. Simple as that. You don't want to be giving a guy that says, okay, give me your money and I'll triple it, and then he comes back and then took half of your money already. You don't want to do that. And in investing, pretty much nobody's saying that, but you have to look at the history. You have to look into what investment strategy are you doing in order to be profitable. And the second one is that after you think you want to invest, and let's say you get an kachinko or like a spinning machine or like a blackjack, and you won something. Oh, damn, lost it. Anyway, and then you luckily won, but it's a chance of 1 in a million, but you won already, like a lotto, and you expect to win another, and you keep buying lotto. That's not a good investment. It's gambling, and it's emotional based. What you do is like when you're gonna buy a lotto, and you be like, oh yeah, I feel like today's a lucky day. Maybe you do get lucky. It's a good investment if you don't put your life savings and buy all the lottos. Okay, so that's emotional based. You don't do something and expect it to get profit just by you feeling like it. You need something of a statistic yourself. And what is smart investing? Smart investing is that the first thing, the king, is the risk to reward ratio. So you need a better risk to reward ratio. Anything that's above 1 to 1, but 1 to 2 is perfect. 1 to 2 is always perfect. And that comes in pair, like the king and the queen. The queen is the better win rate. Anything above 40% is fine. Why I say that? Because when you have 1 to 2 risk to reward ratio, let's say 1 to 2 risk 40%, meaning that out of 10 times you lose 6 times, but you only win 4 times. But with the king, risk to reward ratio, meaning you put in $1 and get $2 back, you will still be profit. Let's say in this case, if you put in $100 10 times, investing times resulting this is the results. You lose 6 times, you win 4 times. The risk to reward ratio is still 1 to 2, meaning that when you lose 6 times, you only lose $600. But when you win 4 times, you win $200, meaning that you will win $800, and then creating a net profit of $200 anyway. So in the long run, if you keep doing this, I'm not saying it's gonna be like this every time, but if it's something repeatable, something that's history proven to be like this all the time, then this is gonna be your go-to. Okay? And now you may be wondering why when I'm gonna go back into the gold and what investment strategy I'm using is that I'm using supply and demand zone. Okay, so don't let these tools discourage you, but let's say I take off all these tools and then I'm going to show you what are supply and demand zone. Okay, so let's look back at the history. This is a 1 minute time frame. So in this graph, this area right here is a supply zone. It's a demand zone, meaning that it's a demand zone, meaning that every time the price drops down to this area, and there's a strong demand, people will buy and they will drive the price up. Okay, this is a demand zone as well. This is also a demand zone as well. Okay. And what is a supply zone? The supply zones are the areas that the price will likely to go down after touching that price, meaning rejection of the price going higher, which are these. So these are supply zones. Okay, these are supply zones. So every time, most likely that it hits these. So let's say, let's go make like a back testing like this. So let's say this is a very obvious example. Let's say this is real time. Let's pretend this is real time. This, you more likely to win if you trade sales position or shorting in the CFD market. Okay, CFD, or you can call it Forex. I'm not gonna go into much details. You can do both long, short. Long meaning you invest in the bullish side. Price goes up. But short meaning invest in the bearish side of the market. Price goes down. The CFD market Forex long meaning that you buy, long or buy. Sell, okay? So in the trading view, so sell like this, buy like this. So right now in the replay, if you sell in this position, right? And say you have a risk to reward, let's say you are essentially have a calculated risk to put your money here and to have a, you see here, 1 to 2 risk to reward ratio. Let's say you invested, you front run this, and then there you just made your profit here. So let's say you put in $100, you get $200 back. How about that? So this is a strategy I'm using, and also for the bullish case as well. If the price goes to around here, no, you don't. So this is something that you never seen before, right? So in the bullish case, okay, stop. What's happening? That's a big jump. So right here, if I invested right here, let's say I was quite late and I still invest in here. I'm not saying that I'll be profitable. I don't know what, but it is most likely for me to be in the profit. So this is live right now, and you may be wondering what are all these these indicators are. So these lines here, these lines right here, this is what it's called a W zone. It's essentially just be your eyes and ears, and be your painter, saying that this area is a very it's a resistant area. It's the blue one, meaning that the price is most likely to go down when it touches the resistance line, right? But when it touches this line, it's most likely to go up. So you have a high chance to buy this area and to short this area. So this is a short-term sideways at the moment. But what about other tools? So the trend tunnel here. So you basically say to yourself that this tunnel only defines the trend, meaning that this is a kind of bullish trend, right? Because it's above the tunnel. So this is the tunnel, right? This is, so in the smart money concept is that you follow the trend. So you're more likely to win if the trend's bullish and you go long. So this is a long position right here that is most likely to win if you go in here. But you can pair it with this. If you buy it somewhere around here, so plus and minus, you're more likely to win. But with the knowledge and with the history of backtesting it, the most likely chance that you want to go in is that you go in the area of the tunnel. Okay. And what about the last tool is the gold swing strategy. So we have gold bugs, I'm gonna go silver bugs as well. So basically what does this do is that it creates another big tunnel here, and it's a swing trade, meaning that, as you can see, if they say there's a buy here and it's outside the tunnel, meaning it's more likely for the price to go up. But if it's have a sell and it's outside the tunnel, then it's more likely to go down. So you can use that. So when do you use it? You use it when the market is at a swing, a sideways market. But right now, let's go back and see the trend tunnel. Right now is a bullish, but you have to have some sort of understand of the trend. So the trends are only about 3 types of trends. So bullish trend, so the price keeps going up. Bearish trend means the price keeps going down, and sideways means the price keeps going on the side, meaning that it does not decide yet to go up or down. Up or down. Yeah, that's about it actually. And so in order to identify the trend, I'm just going to so this is a trend defining tool, trend tunnel strategy. So you have to go to 15 minutes. I'm gonna hide my drawings for a minute here. Minutes. Why 15 minutes? Because we are trading, day trading. Okay, why day trading, you say? Because it's low risk. You don't have to even whenever the market, whatever the market is, if it's a stable uptrend or unstable downtrend or volatile, like right now is probably the best time to use these tools to do a swing trade, to do a day trade. Okay, why? Because even if it jumps up 100,000 points, then you'll still be fine. And don't be an idiot like me, where I was bullish for gold for 2 years, and then all of a sudden it drops 20% in a day. Then I lose most of my profit in that day because I was doing a swing trade and I didn't. Just right now. Just right now, there's a signal of gold swing trade. Okay, so I'm just gonna jump in and do the selling. One, two, three, four, five. Okay, so this is a short trade. Right here I got a signal, and look at the W zone. So this is a buy zone and the sell zone. Okay, and the stop loss is 4776.95. Reward is 4746. Here, this one to one. Uh-oh. Yeah. Okay, I'm just gonna go in right now. Cover me, I'm going in. That's okay if I lose this. You have to have a growth mindset. 4776.95. And the profit is 4747. Seven 4746. Alrighty, the trade is active. So why did we go in? Because we actually using the tools right here. Okay, I'm actually have to be honest with you, I'm following my masters. He's still teaching me, I'm still coaching, I'm still being coached. And then he given me this is a pivot point. It usually how it works is that once it hit this high demand zone, and it became from a demand zone became a supply zone, because it just did go up and then it didn't hold the price here, then if it hits again, it's most likely to go down. So let's see how it's going to go out. And then the best thing to do right now is to wait. All good things come for those who wait. Be patient. If it goes stopped out, then you have to let it go. If it doesn't, then it's okay. So yeah, the reason why I chose this is that wouldn't you think that, are you tired of thinking on your own and draw these lines every time and hoping that it will be the way you want it to be? Then you don't have to worry about that anymore, because you can have strategy that works every time. Wouldn't you like it? Wouldn't you like it if you have a strategy that you can repeat again and again, and it's profitable? It's the risk to reward ratio is king. What I use is 1:1 or 1:2. Depends on the market condition. Okay? So wouldn't you like the system where you can repeatedly have your investment have a better risk to reward, 1:1 or 1:2 risk to reward ratio every time, and the win rate is 40% or up or more every time? Last time, my teacher ended up with a 70% win rate last month, and but he's a master. He's a teacher. He has way more experience than I did, and I gotta tell you, man, he's an inspiration. That's why I'm doing this. He's been through market structures. He's been through so much in the trading world, and he is what do you say? He's a math teacher, and everything has to be backed by numbers. So when he backtested this, he didn't just backtest a day. He backtested months and years, and the strategy changes every year, to be honest. And with these tools, really helped me to keep my emotions intact. Really keep my emotions intact, and really keep me become a better investor, learn from my mistakes, and essentially it's a better way to live rather than be on my own. We have such an amazing community, the trading community, that's helped me through the throwbacks, the setbacks, but this community just keeps on its ground. And having the 2 years that I've been looking at them, they've been doing this for like more than 2 years, like 5 years or 6 years in the records, but outside the records they've been doing it way more, too many years. I think it's 8 or 10 years. So they're creating a community that which I'm following right now, of course they do give signals, but they always say that please don't look at the signals. Only you have to understand for yourself, because these are investment. This is your money, this is your hard-earned money, and of course the money that you're investing, it should not be a hot money. Hot money or your only capital. It has to be an excess money, meaning that if you don't see this money again today, you'll be okay, because that's gonna affect your emotions. Even though that the teachers, the masters, and everyone in the group saying that okay, do this plan, and then hold your position, just like hold the line. If you guys play Mass Effect, but okay, whatever, then you will be profitable in the long run. So right now, the reality, I'm not gonna sugarcoat anything, because this is the position that we are going in right now, because it hit the old supply demand zone and became a supply zone, and we are thinking that it's most likely it will go down. Now that it hits the middle of the trend tunnel, then the decision is about to be made. The price could recover really quickly back here, or it was just the price would go down and take our profit right here. So the choice is the market's choice. We have no control. We only put ourselves in an advantage position. Let me ask you this: would you fight Mike Tyson now, or would you fight like somebody that's lower skilled than you, and your goal is to win? Like a boxing match. Of course, you wanna at least have a fair fight if you're honorable, or if you really wanna win, you can fight against a kid. just kidding, So of course, if your only goal is to win, no moral questions, of course you want to fight with a kid. So the market's the same thing. You want to put yourself in a position where it's been tested to give you an advantage. To give you an advantage, okay? This will give me an advantage because you hit the previous demand zone where the price jumps up, but it failed to hold the price. So it goes down, and this is a bearish trend, to be honest. But right now, of course, it's a sideways trend, but that's why it's only 1-to-1 ratio, because we believe it's a sideways trend. But let's see how this plays out. Okay, I'm back. This is went to the loo. Oh, what's going on?
Okay, I'm back.
Just went to the loo. Oh, what's going on?
Okay, I'm back.
Just went to the loo. Oh, โอเคครับเข้าใจก็สวีทโอเคกลับบ้านได้ครับได้
Okay, I'm back.
Just went to the loo. โอเคครับเข้าใจ So How's my voice? How's my voice? So, one of the things that have to keep in mind is that the market does not go anywhere. Okay? The market doesn't go anywhere. The market will always be here, and 80% of the time you'll be waiting. You don't overtrade, please don't overtrade. Only find a position where you feel like it's your time to shine, have an advantage. Price actions saying something. Right now we have a bullish candle, a really big bullish candle, but let's see how strong is the bullish candle. I don't know if you guys into astrology, but if I have to be honest, the high volatility, happening now is a bullish candle. But I mean, please don't look at the graphs. You already put in your best position possible, because the more you look at the graph is that you waver. You feel like, should I do this, should I do that? But right now, don't. Just keep in mind, stay strong. You guys meditate. I think meditation is come a long way. So if you, in case you guys don't know how to meditate, or this is the first time, just imagine you are the gatekeeper of your breath. You're not responsible to catch your breath, nor you're not responsible to let it pass. Be an observer. If you breathe out, let yourself breathe in, not you demanding it. Breathe in naturally, breathe out naturally. Emotions, thoughts, imagine it. They are clouds, streams of water, breezy winds. Let it pass through. Let it go. Okie dokie. Let it plays out. Yo, yo, yo. You guys still there? What? Why's my podcast offline? test. Test. Still there. Okay, so if you're still with me, as you can see, the price action is a little bit slow. But what happened after 6 p.m. Thailand time, the market structure, I think it's very volatile. It shoots up to 4,773, and then it goes back down to it drops about $30. And it goes back up again, goes back down. So the market is very skeptical because the Trump situation right here, and we don't know what's gonna go on. We have no idea what's gonna go on. Breathe in, breathe out. Meditate with me, guys. So, you guys still with me? See, the market direction is moving very slow. We are transitioning almost 3 hours times. We're gonna transition to London. Yeah, the market is very unclear. Look at the big picture. Yeah, it touches this area, goes down, most likely, but we never know. So like I said, 80% of the time is waiting. So this is a 1000 TP. We jumped in a bit early. We already would hit. We didn't take the front run, but it's okay. 80% of the time is waiting. Let's wait. Waiting, guys. Have to be very patient. 80% of it is waiting. Reversal can happen, but we wait. We wait. We wait. Wait. Keep waiting. Keep waiting. Okie dokie. So we just closed the trade because it's taking way too long. We're gonna put it in our account. $18. That's 269. Win, I guess. So, what now, you might think? Right now, we don't have much going on. Too little profit that we had. Wait for the next position to go on. Yeah, I think that's about it, guys. Thank you for watching. And yeah, I kept I'm keeping all my data. I'm gonna share it with you a little bit. We have a little bit in Thai, but you can see my structure. Just a moment, please. Yeah, I'm just gonna this is what I do. So I began on 1st of April and I so far have gained about 6% of my portfolio. So it is at 10,000. Actually, I'll have to change it to 2,000. So it's 3%. This is how much I've been doing. I'm still a human, not a professional trader. Sometimes I chickened out, sometimes I code all the way through, and in the end I'm still in the profit. Yeah. and thank you guys for watching. The journey is far from over, and yeah, just keep it on with me until we reach 1 million US dollar, eh? That's my dream. Okay, see you later.